do today. Um, and what we did with the other class then is we just stopped because there's so much talking. And we're going to start Friday with doing the work together. So it's a kind of a nice little reminder. And then we'll do the app. And then we'll move on to 9-3 on Friday. So you won't have any homework to do or anything like that. But we just want to go over this 9-2 part. So we talked about corporation. We talked about merchandising business and how it differs then from a sole proprietorship and the subsidiary ledger. Well, now we're going to get into special journal, special amount columns, and how we're going to order and keep track of all this stuff. Okay, so we have this thing called inventory. And its inventory is all the stuff that we buy, assets, merchandise, things of value, we keep track of, right? Now, when you're thinking merchandise inventory, there's a phrase called company or an account, excuse me, called merchandise inventory. Those are the actual goods that we're going to sell. Okay? And this is going to be a new account that we'll deal with and we'll use, and it's going to be an asset account. So when we're talking assets, we're talking debit increases, right? Credit decreases, right? And you're thinking merchandise, we're thinking like for the hats, the hat store. So everything that we are going to sell. Again, not the day-to-day supplies that we need, okay? So we need to keep track of our inventory. And when we do so with merchandise and purchases, we're going to talk about it. Right? There's two different types of methods to keeping track of main methods of keeping track of inventory. And actually, the one that we often run into, Elliot, we talked about with you, is we talked about it with Jackie, and is this periodic when you guys got to physically count stuff. You got to go up early in the morning. So people that work at stores, you might have ran into it. I know a couple, that's why I said something to Elliot. A couple of you have had to go in there and you got to literally count everything in the store. The buddy of mine that owns the tile shop, manages the tile shop on 100th Hickman down here, they do it 4 times a year. Every 3 months, everybody's got to come in. You got to go through and count it all. Even though, when you guys, has anybody self-checked yet? You guys have gone self-checked out of things? You scan that's a running total. So we have these inventory methods. A perpetual inventory method just means keeps a running continuous, it's a computerized running total. Okay, you scan it, it goes out. But that doesn't mean there's breakage. You might not scan. Theft, you might not scan. Things that maybe get thrown away, you might not scan. And even though they might have steps involved. So it's not 100% foolproof. But it's a pretty good system if you're able to do it. Now, if you're just a mom and pop shop and you don't want to invest in a computerized system and a scanner, and you'd rather just sell things period with and keep track of it by counting, ordering it, putting it on the shelf, counting it, ordering more, that would be what's called a periodic inventory, where the merchandise is evaluated at the end of each fiscal period or order period even, and you constantly are counting and throwing stuff away. So if you think of, like a small barber shop, for example, right? They might not have 700 supplies, but they might have 2 different types of shampoo people, and different products, 2 different types of gel product. They might not have a ton of products, so they might not keep track of it as a perpetual way. They might keep track of it just by counting. Okay. And that would be called a physical inventory or a merchandise where you count the merchandise by hand. These are the 2 main ways. Often there's a combination of these. Okay? So when we're thinking inventory, you're thinking all the things that you're purchasing. If it's merchandise for sale, it'd be merchandise inventory. And there's a perpetual inventory way of doing it with a continuous computerized system. And then there's a periodic inventory way where you physically go ahead and count it. Okay? That's basically what we're talking about. So that's the inventory, how we're going to measure and keep track of it. Now, we have this new section. These are now, like when we said that expenses are usually 500 accounts, But you remember when we looked at the chart of accounts, the expenses went down to 600s. Okay. Um, the chart of accounts now with the 500s is the cost of goods sold. And so we're slowly going to learn about cost of goods sold. And so that is the cost of the merchandise. So when we're talking goods sold, the merchandise we sell, the hat store, how much hats did we sell? The amount of business pays for goods it's purchased to sell is called the cost of merchandise. All the stuff that we want to sell, that we have to buy, the goods that we have to buy. It tells us that Mary's company, 3 Green, she's chosen the periodic inventory. She's just going to count it, okay, which is fine. Means a periodic inventory system is used. We are going to use and record merchandise under an account called purchases. Okay, so purchases is now a new account. It is going to be considered, purchases is going to be under the cost of goods sold account. It's going to be separate from the expenses. We always call it a cost account. So purchases is going to be a cost account. How do you increase purchases? It tells us here that purchases will be increased with the debit and decreased with the credit. So purchases is a new account. When we're dealing and ordering and purchasing merchandise that we will sell, we will debit purchases. Now, when we buy supplies, when we buy, coffee cups or stationery or pens and paper, that's not going to be debited the purchase. That'll be debited supply store, supplies office. But when we buy the goods that we're actually selling, the hats or whatever the company is, when we buy the merchandise we're going to sell, we will debit purchases. Okay? When we buy it on account, especially. Okay? Purchases decrease, increase with the credit. Okay, I talked about all that. Good. It says the items when no other items such as store items are put in the purchase account, the items will be put in supply store, supplies office. Okay, good. This just talks about all the costs. This isn't really necessary. This is a bunch of information you can read. I kind of highlight a little bit, but all the costs that are involved in the purchase will be considered in the purchase. So shipping. So like when you guys order stuff through the activities office, everybody gets dinged $5 for shipping, even though it only costs Graphic Edge or whoever $25 to ship the whole box. There's 75 package little shirts in there. They all get charged $5. It's a scam. It's a nightmare. The activities office makes money off it. You guys are the only ones that pay. But anyway, that's what they're talking about. All the costs go to it. We don't have to worry about freight expense in accounting 1. And this just talks about if you use perpetual or periodic, so it's nothing too bad. It just says, regardless of which inventory method is used, the cost of goods sold is going to be reported on the income statement either way. And so we're going to be keeping track of purchases for merchandise, okay? We will have a purchase order. We have receipts, right, as our source documents already. We've had checks. We've had memos. Now we're having a PO or a purchase invoice, it'll be a purchase invoice, okay? And they'll call it a purchase order. It'll be where you're purchasing from, where it's being shipped to, the amount of things you're buying, the cost, okay? All this will be a purchase order. It'll tell you the number. We keep track. It's numerical, just like checks, check 1, check 2. That's what we're going to be using. Okay. All right, ordering the merchandise. So we kind of understand we're going to purchase merchandise. We got a new account called purchases that will debit when we purchase the merchandise, which is only things that we're going to sell. You might have to fill out a requisition. We don't really do this. We don't really talk about it after this vocabulary word. Urbandale Schools is a huge business, right? That's a vendor. That guy doesn't work for us. He works for the printer company. You have a problem with the printer, the toner's out, he comes, we got it, we got to pay him. He will bill us, we'll pay him. Schools are a huge business. You think about all the stuff you buy, blah, blah, blah. We don't have requisition forms. We do POs, purchase orders. So like when we bought a printer for Coach for Clay's room, Theo King's room, that was the last thing we had. We had business department had to fill out a purchase order so that we could buy that. But the requisition is a similar thing. So requisition is just this process, these forms employees got to submit to try to say, hey, we would like to purchase this. Now you just send an email. They send you it's nothing big. But anyway, at least you understand a form requesting purchase of merchandise is called a requisition. It's something that you might see, a requisition. You hear about it in sports. We acquired the rights to this right-handed pitcher. Right, it's a requisition. All right, it's just like a purchase order. It has all the descriptions, blah blah blah. A form requesting the vendor to sell merchandise to a business is a purchase order. So requisition is us asking our bosses if we can do a purchase order. Okay, and we just kind of looked at it. This is just saying if you buy things online, sometimes you get discounts. It's simpler to do orders. Some vendors will offer those things. It's nothing earth-shattering. Okay. For our purposes, we're going to order purchase orders to purchase our merchandise. Okay. Special journals. We used to just do general journal, right? That's all we've done, 8 chapters. Well, this chapter, we're going to learn about purchases journal and cash payments journal. The sales journal and cash receipts journal we'll learn about in chapter 10. And then all a bunch of different special amount things that we do will be in the general journal stuff, chapter 11. Okay? So what is a special journal? A journal used to record only one kind of transactions. So when we write a check, it'll only be put into the cash payments journal. When we receive cash, we will debit cash in the cash receipts journal. They're done to simplify things. Sometimes people don't like it, but you get used to it, and it's pretty simple. You get used to going just to that journal. The purchase journal is the simplest of them all. There's one column. Okay? There's only one column for it. So here's the purchases journal. You see the one column? It says purchases DR, which means we will debit purchases here, and we will credit accounts payable. Okay? And there's not that many. We always do this type of thing, but we're going to always do it. All right, you'll write the date, you'll write the purchase order, we'll debit purchases, credit accounts payable, so we just do one column. Okay? What's put in the purchase journal is only transactions for merchandise on account, meaning we will purchase it and pay for it later. Does that make sense? Purchases on account. So like when we used to buy supplies on account, we credit accounts payable. When we buy purchase on account, we're going to credit accounts payable. We'll put the vendor's name and credit accounts payable. Now, when we buy purchases with cash, I think it says that somewhere. Well, if it doesn't, it says it later. We buy purchases with cash, then it goes in the cash payments journal. It's only when we buy purchases on account. This purchase journal is a special journal only for purchases on account. This is called a special amount column because it has an actual account title above it. So like our column titles we get used to before were general debit and general credit, right? Well, those aren't accounts. Those aren't account titles. But purchases isn't a new account. We just learned it today. Accounts payable is an account. So this is called a special amount column. A journal amount column headed with an account title is called a special amount column. Okay? The idea behind this is that it's supposed to help reduce mistakes because you don't have as many columns, and it's supposed to save time once we learn it. All right, so we're going to order purchases and we will have invoices. An invoice used a source document for recording a purchase is going to be a purchase invoice. That'll be our source document. So it's just the same as a purchase order. Okay, so when it's an invoice, we will get billed it. That's going to be so in order to order things, you need to fill out a purchase order. But when we order it for real, we'll get an invoice saying we get billed. and it'll say all the same things. You'll have a date, it'll have terms, and that's what they're getting at here. So an invoice uses the source documents. We had checks, receipts. We're going to use purchase invoice. Lists everything on there. You don't really need to know all this. This just talks about the invoice. There's going to be terms. It'll say you're due to pay this in 30 days. And it'll say net 30, meaning you got net 30. You got 30 days total to pay it. Or they'll abbreviate it and put N30, which means you just have 30 days to pay it. That's the net total. Okay? And then you guys understand what a due date is, a date by which you need to have your invoice paid. Purchases made for cash are not in the purchase journal. Okay, purchases made for cash will be in the cash payments. It's only purchases made on account. All right. So here's what you guys will be given. You'll be given 3 or 4 of these transactions, and you'll have to record them into the purchase journal. The date, the vendor, the purchase invoice number, purchase merchandise on account from Win Lighting, and then you put the purchases debit, accounts payable credit right there. Debit purchases, it's a new cost account. To increase purchases, you debit it. To increase accounts payable, you credit it. That's all they're talking about. Okay? So that, in a nutshell, is 9.2. What we'll do